Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hello, everybody, and welcome to the Finovate podcast. We are starting our series of Best of Show winner interviews from FinovateSpring 2024, the event that concluded in San Francisco this past May. And first out of the gate, we're going to be talking with Christian Widhalm, CEO of Bloom Credit. Christian, thank you so much for joining me today.
Thank you very much for having me.
So before we get too far, I should mention that you can take a look at Christian and Bloom's demo at finovate.com/videos. You can see exactly what they did with their 7 minutes on stage. But Christian, for anybody who hasn't seen that demo, or at least hasn't yet seen that demo, can you start by giving us just a quick introduction of yourself and a little bit of background on Bloom?
Yeah, absolutely. So I'm actually, I think just recently now entering my 15th year in fintech, which seems kind of crazy to say. But my background is been working in fintech, really in a mix of lending and credit data. Prior to Bloom Credit, I was at a company called LendKey, where I was chief revenue officer and led our relationships with 350 to 400 banks and credit unions, and really kind of leveraged, obviously, a lot of experience from my time at LendKey to really kind of come into Bloom to drive the direction that we're going and how we actually move ahead. And there's a significant amount of value to be kind of uncovered within the ecosystem right now, specifically around credit data. And that's exactly what Bloom has been set out to do. So the background on Bloom and who we are a infrastructure platform that's really leading the modernization of credit data and credit data transmission. There's an issue within the broader ecosystem that really is impacting over 100 million consumers, where there's either errors on credit reports, there's people with a lack of credit history, and there's folks that obviously have subprime credit. And through the tools and the infrastructure that we're building on behalf of our clients, so we're a B2B, is really set out to solve those issues, make credit data more robust so that consumers benefit, lenders benefit, and the entire environment effectively benefits. And ultimately, it leads to what we really are looking at, which is more access to affordable credit that's out there for consumers.
Yeah, and I think that's a really interesting piece. So obviously, the value for those consumers who then go and have access to sources of credit that they didn't have access before, it's really easy to see how they stand to benefit. But when you look at kind of, the banks or financial institutions who are serving them, or even society at large, I think there's this question of what are those groups missing because of some of these gaps or these holes in the way that we think about credit decisioning?
Well, I think that if you kind of look at the broader ecosystem, right? Credit data itself, the way that credit data works, as a quick 101, is that you've got the major credit bureaus, Experian, Equifax, and TransUnion, and you've got all of these other lenders that have basically been doing what they do, originating loans, credit cards, et cetera. And ultimately, that data makes its way from the lenders over to the bureaus in the form of repayment data. And they have, over 1 billion trade lines that are currently reported. It might be like 3 billion trade lines are actually currently reported to the bureaus. The issue is that the infrastructure and the formatting for that data to come over is 25 years old. It's an old format called Metro 2, and it does an okay job at getting traditional repayment data in, albeit still filled with a lot of errors that are impacting consumers and have been flagged and identified by the CFPB as a problem and a concern. But you now have this convergence of both the traditional credit data, but also now alternative credit data, non-traditional data that's been being used in decisions, and things that don't necessarily have a great path to get into a home/repository to be broadly used and understood by lenders, as well as stored by the bureaus. And that has really kind of led to some of these problems, right? Where there's 100 million consumers that don't have access to mainstream credit rates for the reasons I articulated before. And the unfortunate thing for those consumers is that they have to go and figure out how to get credit elsewhere if they need it, right? Because there's limited information on them, and a lot of the traditional FIs won't lend to them. That actually costs those consumers an extra $20 billion a year in terms of going and finding higher cost alternatives that they can't get from a traditional FI, because traditional FIs aren't comfortable yet in unlocking and serving really that demographic. And we think that there's very clear ways for consumers to demonstrate creditworthiness via different methods, right? And that's kind of what we've been putting together.
Yeah, well, that seems like a natural transition point. Let's talk about the methods that you're using, because I think, again, people should take a look at the video, but I'd love to hear kind of your specific approach to things. You don't necessarily need to recap the whole demo, but at least a high level of the factors that you look at would be really helpful.
Yeah, and I think even before I jump into that, I think the one thing too is we really always stress, right, is that we live in a world where access to credit is critical, right? Consumers obviously miss out if they can't access credit. There's certain things that might pop up in life where they're going to need credit. Lenders miss out by not having as much data that's available to make intelligent credit risk decisions and assessments on these particular consumers. And then you've got these banks and credit unions that are all kind of struggling to attract and retain their next generation of customer, right? And at the same time, consolidation is ramping up amongst these types of institutions. When I first started 15 years ago, I think there was 15,000 banks and credit unions in the United States. Now it's down to less than 10,000. And if you look at I think it was Gary Rudman he was up on stage at Finovate, and he approached me after I got off our demo, and he was giving me some stats and telling me about stuff with his own research that 88% of bank managers think that they're serving the needs of just Gen Z. Well, you talk about underserved, like Gen Z is a segment. You obviously have immigrants and a whole slew of other folks that are underserved, but 88% of bank managers thought that they were serving the needs of Gen Z appropriately. When they interviewed and surveyed Gen Z found only 34% of them actually agreed that banks and credit unions were actually serving their needs. So there's this big chasm in terms of reality about what the banks are doing and the credit unions are doing versus what a lot of these underserved markets and growing markets really need. And that's kind of where we step in, right? So what Bloom is doing is that one of it's a new product launch for us this month, and we're launching with some FI partners. Really excited about it. It's called Bloom Plus. It's what was presented that you'll see in the video from Finovate. But effectively, what we do is that we allow our partner FIs, banks and credit unions, to offer a fully white labeled, no code solution that allows their customers to get credit and build credit history with their normal recurring monthly bank transactions. So credit's always been this kind of chicken or the egg thing. It's tough to get credit if you don't have credit, right? It's like, all right, what do we do here? But it's been difficult for consumers to prove their credit worthiness based upon their normal recurring transactions. And those include things like rent, telco, and utilities, water, electric, and gas. And what we're bringing to market is, and we've had great reception so far, is the ability for the FI to offer this experience all within their brand, all within the walls of their FI, live in as little as 24 hours, and the ability for those consumers to take advantage of their recurring bank transactions out of their checking/DDA accounts and get those reported to the major credit bureaus as trade lines with score impact. And if you think about that, there's a ton of value that's there. For the consumer, obviously, the ability to start enriching their credit profile and getting access to more types of credit. But for the FI, obviously, there's some regulatory halo effect because everyone wants to know, hey, how are you helping the underserved? How are you promoting financial inclusion? But then you also just have deposit activity and retention, right? This is another thing to make deposits and checking accounts more sticky with your institution. There's loan growth because these are folks that you might not have said yes to for something previously, and now you have the ability to say yes to at least extend an offer of an entry-level credit card or other type of credit product to them that helps bridge the gap between what this underserved market is experiencing today, trying to access credit, and then having a lifelong relationship with that FI where there is so much competition going on about how do I get my next generation of customer. This is a conduit to be able to actually to do that and provide a lot of value. So that was the overall spiel, I guess, in terms of really kind of what we talked about, but also what we're solving for.
Yeah, no, I think it's such a smart use of all the data that we have available now, because there's been so much obviously made of the different types of data points we're able to collect. And now that you're able to kind of take some of these transactions and turn them into an area that's really productive and kind of immediately useful. And there's been a lot of talk about users kind of building their own bank by compiling financial services from a variety of different cultures, well, or not cultures, different companies. But here you have kind of the opposite. We have a bank kind of building their own customer, right? They're sort of saying, hey, I can create somebody who can then go out and become a future potential borrower for us by giving them these tools that they need to gain their credit worthiness, and also that I need to understand that, yes, they are credit worthy. So I'm curious about what types of transactions that you are able to look at here, because you mentioned a couple of them. How do you sort of find this line between the transactions that are able to sort of be used to build up into this credit arena, and which ones maybe aren't able to be used for that?
Yeah. So, for example, like if we're so the way that it works is that the consumer connects their checking account via an aggregator, and then we provide enrichment services over the data that comes back from the aggregators to find and identify these recurring monthly obligations that are obligations/transactions that are reportable, right? And then we show those to the consumer. So the consumer is not going through and scraping through all their transactions out of their checking account. We actually show them everything that we feel is qualified based upon it being a recurring payment. It's to the same provider. It's around the same time each month, and identify and flag all that so the consumers don't have to do it. So, like, for example, we're not going to show somebody, hey, you paid Starbucks once, you refill
Right.
your Starbucks card once a month for $50. All that stuff is basically curated and filtered out, and we only will show them what we feel are confident that they can actually build credit off of. And today, those that can go on the credit report specifically in the easiest fashion is the rent, telco, and utilities that I mentioned.
Yeah, no, that makes sense. And I'll share a little bit here. My wife and I have long had a credit score competition. So you could get their score the highest, and we would fight to sign up for specific bills because you knew that they were going to be improving your credit. I'll take the cable one. I'll take the the cell phone, because I know that that's going to just give me this extra couple of points. This is the type of things that you do to occupy yourselves when you're in a relationship with two financially focused nerds, I suppose. I want to switch gears now and talk about your experience at FinovateSpring. Obviously, what you were presenting really resonated with the audience. They voted for you for Best of Show. I'm curious about what types of responses you were getting at your booth. Were people generally pretty receptive to your way of thinking? Were they skeptical about certain aspects to it? Did you find anything that's going to help you kind of learn and grow? What types of responses were you able to find there?
So we had no one come up to us that was skeptical. I'm sure there could have been somebody, but they didn't come up to approach us. Everyone that came to, we had a lot that came up to us afterwards. They were highly complimentary and excited. Some of them, most of them were credit unions and banks that wanted to learn more, that really saw value here, right? They're like, this is something that we think as our institution could be a real value add to our customers, to our members. We'd love to figure out how to learn more. We'd love to figure out how we can potentially offer Bloom Plus. And that was a lot of the conversation. So that was obviously great because, it's a target market of who we're serving, and they were there. They voted for us for Best of Show. And we also had a bunch of other people come up to us that worked in different areas. Some of them were consultants, some of them were investors that were just incredibly interested in it. I had somebody come up to us from a big bank, and he said in particular, he goes, "You are building an awesome solution to a real problem. And this is something that we can absolutely get behind." And those are good things, obviously, to hear, right? As you're kind of going through this. And we had a lot of that type of commentary of folks that came up to us at the booth. So it was very well spent at the booth talking with everybody afterwards.
No, that's excellent. And I'm really glad to hear that you're getting buy-in from some of those folks on the banking and credit union side, who are the ones who really need to be very active here if they're going to be significant changes made. So I'd like to end by zooming out and looking at kind of this broader problem again of, the lack of available credit for certain groups or the kind of thin file, no file customers. What do you think is the biggest hurdle you need to overcome in order to really be able to make a significant difference here? And I'm not talking about, one individual financial institution. I'm talking about kind of society-wide. Is it more of a tech problem, a mentality problem, something else altogether, or maybe even a combination of some of those factors? What do we need to see change in order to really start cutting down on this number of people who don't have access to credit?
Yeah, I think it's a combination of factors. Look, I mentioned the tech stuff earlier on about just the way that data normally goes into the bureaus. You've got all these potentially thousands of systems of record and ledgers that are actually housing data. You've got, including DDAs, including traditional repayment data, and then you've got the bureaus who have their own rigid business processes. And you need a smart intermediary that acts as a conduit to really be able to facilitate this. And then obviously there's education too, because not everybody knows. But I will tell you that I do think that the bureaus have done a great job getting consumers to care about their credit scores. Experian Boost, I think, has around 15 million users where they have a direct relationship with the consumer outside of an FI. Credit Karma claims, I think, like 130 million users, and I think they also claim 50% of all millennials. So the time is kind of now in terms of empowerment for consumers to really understand and care about their credit score. And so I think a lot of that education has been done. It's really more education around, wow, I didn't know I could actually benefit from this, right? I didn't know I could benefit from payments being made out of my my checking account. And the good news is, if you look at like even just aggregator usage, right? The rise of aggregators over the last decade has been huge, right? Between like the Plaids, Finicities, the MXs. And now consumers are absolutely more used to this type of integration into their bank account to be able to actually come in to Bloom Plus, do our enrichment services, and do everything that we need to do. That's really, I think, also kind of laid a lot of the groundwork. But I think that overall this paves the way, for adoption, right? Is you have the technical resources through Bloom for the last mile into the bureaus, right? You think about it from that perspective. Aggregator adoption being mainstream, and the consumers now knowing more than ever about their credit score and history. And I think that this is something that a lot of people are getting excited about. And I think it's something that you're going to really start to see, especially over the next few years, that this is just something that you do. You report your credit, you report your DDA checking account transactions to the bureaus to help benefit you as a consumer to get, access to affordable credit, demonstrate your creditworthiness in different ways, and at the same time fill the ecosystem with more data so that lenders are making the right decision, consumers are actually getting credit, the bureaus actually benefit by being able to have more clean, accurate data that's actually coming in. It's really a win-win-win for the entire ecosystem. So will it happen overnight? Like anything? No, it won't happen overnight. But I think that we're gonna see a pretty large shift here fairly soon.
Yeah, I think that's probably accurate. I think that we've reached a point now where there's enough momentum, and I think to your point, education is going to have to play a major component, and people are going to have to work in partnership with their financial institutions, and certainly those FIs are going to need to be really proactive in touting the benefits, making sure that their customers know about solutions like this. So I think hopefully we are reaching a tipping point. We can start to really see that number of thin file, no file credit risk users come down. I think it's something that will benefit society immensely. So easy to see why the audience was so enamored with what you were showing. And again, I would encourage anybody to check out their video at, again, finovate.com/videos. The company is called Bloom Credit, and I've been talking with their CEO, Christian Widhalm. Christian, thank you so much for taking the time to connect with me.
Thank you so much, Craig. I enjoyed it.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.